Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Thursday, June 21st, 2012. There's a lot to cover today, so let's get right into the charts. We'll start off with the usual S&P 500 E-mini futures. Futures are only trading down, well, basically flat today, right around the 1350 and a quarter level, down about a half a point. They were down much more earlier today, around 3 o'clock in the morning. You'll see the futures did trade around 1343 per contract, then rallied all the way up to 1353. What's the cause of the rally? Well, I'll show you right here. If you take a look at the US dollar index, you'll see the dollar topped out right around 3 o'clock in the morning, has sold off, and now the dollar is starting to rebound higher. If the dollar moves higher, expect the futures to move lower and vice versa. This is still the most important relationship in the stock market. Sometimes it's not perfectly correlated, but from day to day, this is probably the best inverse relationship that you'll find. So again, keep a dollar chart up at all times and watch the dollar action. If the dollar moves higher, the markets will move lower. If the dollar moves lower, the markets will inflate and move higher. And that's usually how it plays out each and every day. Now, a couple of other things to go over real quick. One, I want to talk about the European markets first. You're going to see there's a pretty good rally today in Italy, up 1.5%. Pretty good rally in Spain, up 1.25%. Also, there's Germany is flat, and France is basically, well, Germany and France are basically up 0.2% at the moment. And you do have England, which is the FTSE 100, down about 0.3%. So Europe is holding up well so far today. A couple of things you want to go over in Europe when you take a look at what took place there overnight. Or this morning, I should say. There was a Spanish bond auction. They believe they sold some 2-year notes. It looks like yields are still very, very high. However, they did decline a little bit. I think they're 4.7% or somewhere around there. It's still an extremely high rate, though, for 2-year notes. So keep that in mind. But, you know, everybody knows that the ECB is in there buying those bonds. It's not like there's big demand for those bonds. The European Central Bank is in there, probably other central bankers as well, trying to keep those yields artificially pressed lower. So, again, that's something you have to take into consideration. There also is some news about the Greek government. I guess they've formed a coalition government, and they're going to take a 2-year delay on meeting fiscal targets. So this story just gets better by the day. We'll see how that all turns out. But again, they're taking a 2-year delay on meeting fiscal targets. I don't know how that's going to go over with the rest of the world. Then we have Germany, whose manufacturing was at its slowest pace in 3 years. It looks like flash manufacturing PMI declined to 44.7 in the month of May. That is not good for Germany. Okay, if Germany slows down, they've been the real engine of growth over there in Europe. I should say the only engine of growth. It is not France. Germany will have problems. France now has a socialist government. We'll see how that all turns out in the next 6 months. But nonetheless, it is never a good sign to see Germany starting to slow down. If that is the case, then there is problems. Something else that you may want to take note of, if you take a look at Philip Morris International today, ticker symbol PM, they came out and they warned again for the second time, and the warning comes from a stronger dollar. So again, the stronger dollar for Philip Morris is warning. Philip Morris International is bringing earnings down, and you're going to start to see this with a lot more companies, especially all United States companies that are multinationals. If they're doing business overseas and there's a stronger dollar, they're not going to be able to sell as much of their goods. So this is going to be problematic going forward, and we'll watch and we'll see exactly how it all plays out and shakes out. Also, last night in Asia, and then we'll get on to some stocks. In Asia last night, the Shanghai index was down 1.4%. That was the biggest loser last night. And again, it looks like that you had this flash PMI number released in China last night, and it showed manufacturing weakened again. This number, I believe, was 48.1 for in the month of June. This is a pretty weak number. So again, China is in some trouble, and the slowdown is for real over there. And traders and investors need to take note of that. All right, let's get into some stocks here. Enough about that news stuff. If you take a look at oil and gold today, gold is down $21 to $15.95 per ounce. That's a pretty big decline. In gold, you'll see here, down to 154 on the GLD. That's a pretty good fall today. Yesterday, the GLD closed at 155.96. So you're looking at almost a $2 decline here on the GLD to start the day. And again, if the dollar starts to make a move, and the dollar's only up 14 cents at the moment, it's been flip-flopping between negative and positive. But if the dollar starts to make a move, you can expect more of a move lower on gold. Let's take a look at USO this morning. The USO is trading at 30.24. This closed at 30.49. Again, if the dollar starts to make a move higher, expect lower prices in oil. Oil today is down another 65 cents to $80.80 per barrel on light sweet crude. So that's a pretty decent decline on crude. Pretty good decline, a very good decline on gold. And the dollar is not really up all that much. If the dollar makes a move higher, expect lower prices in gold and oil going forward. All right, let's take a look at some stocks that are in the news. We're going to start off with Red Hat, ticker symbol RHT. The stock is getting mauled this morning. Closed yesterday, I believe, at $56.50. Today it's trading at $50.79. That's a pretty decent haircut. Here's some levels you could watch for. It's a fairly decent strength gap down. One level you want to watch for, if it breaks below this low of the day, which is $50, would be 47.39 and then 43.75. So watch those two levels, 47.39, 43.75. There will be short-term support in those areas. Could it bounce a little bit before or below those numbers? I suppose, but those are the numbers I came up with so far this morning. Let's take a look at Bed Bath Beyond. Ticker symbol is BBBY, triple BY. Stock is getting hammered lower this morning. This has been a market leader really throughout 2012, but today it is getting decimated. The stock has cut through heavy support levels. It is trading as low as $66 at the moment. So again, if this takes out this $66 level, traders should watch for $64.64. There's going to be some support there. You'll also find a little support if you come straight down into the 200-day moving average on the daily chart. That would be $63.45, and then it's going to be $62.23. So watch those levels. This is a pretty heavy gap down, so we'll see how the stock reacts after the open, but you get some small scalps off of those levels that I just mentioned. Let's take a look at Onyx Pharmaceuticals. Ticker symbol is ONXX. This stock is having a big day today. Sharp move higher, but it's overbought now. Okay, so just realize stock is gapping up on some drug news. Looks like an FDA panel approved something. Very good move, but do not be a buyer up here at this level. I wouldn't short it either, but I would not be chasing it. If you own it, trail your stop loss or take some profits off the table, but do not buy it up here. It is just way too extended at this point on every single time frame. But a great move on Onyx Pharmaceuticals, and either way you slice it or dice it, it should not be bought up here. It is just way too extended. I wouldn't fade it either because it's a strong name. I don't know what the story's about, how many shorts are in there, if they're going to squeeze this thing up a little bit more, but I don't see a lot of upside from here. Let's take a look at Celgene. Celgene is one basic biotech that is getting hit this morning. Celgene yesterday closed around $67.16. Today it is trading at around $60.50. There's a fairly good support level around this area, around $59. If that level breaks, you have to look much lower on this stock. So again, if that level breaks, traders really should go and look around the $55 area and then ultimately $51.85. So those are going to be your next support levels for this stock if it takes out that $58 level intraday. Right now it is getting a little bit of a bounce, but if it does take out this level, then you're going to have to look lower, and it's going to be 55, and then it's going to be ultimately 51.85 for Celgene. But that's a pretty decent decline today. It looks like a fairly strong gap. Let's take a look at SUNH, S-U-N-H. This is Sun Healthcare Group. Stock was bought out today, so there's nothing to do here. Do not short it. Do not buy it. Do not do anything. If you own it, congratulations. Take profits. But it's been bought out today. I forget the exact amount, but you can see the stock just trading in a flatline base, and that usually tells me the takeover was probably somewhere around that area. So decent move, and if you own this Sun H, congratulations, $6 to $8. That's quite a move. Let's take a look. That's pretty much, well, that's it. That's pretty much everything that I have on my radar today. We do have jobless claims, weekly jobless claims out. Again, I don't know if it's really affecting the market all that much. We did come down a little bit more. Futures are down 1 point as we speak. I don't think it's really that big a deal, the weekly jobless claim report right now. I think everybody is focused on whether these markets will inflate or deflate, and that's really going to drive everything. Just keep an eye on the dollar. See how the spiders, or I should say, see how the ES futures have popped up a little bit off the lows. Notice the dollar here. If you take a look at the dollar, what did the dollar do? The dollar just pulled back in. Dollar down, market up. It's very, very tightly correlated. Sometimes not perfect day to day, but it's probably the best inverse relationship out there. With that said, everybody have a great morning, great trading day, and we'll see you on the charts tomorrow. Take care now.